the dollar is actually fully backed by gold at this point. It's possible that the gold might not be there, as they say. So very interesting. Hey everybody, welcome. My name is Matthew. Thank you again for joining me. We're going to continue on here with another discussion about money, specifically central bank money, specifically gold. Now, in the prior series, we talked about how much money the Federal Reserve prints as a proportion of the total United States national debt. Now, we're going to talk about how much gold is a proportion of the money, the printed money around the world, not just in the United States, but around the world. So I have a selected sample of central banks here, and this is a lot. It's going to be, again, a little small series here. So let's take off Norway, Sweden, Swiss franc, Bank of England, and the Bank of Canada. Let's just leave the dollar and take off the weighted, and let's look at the gold price here. So I'm going to zoom in. We do have a little over 160 years of data here. Just going to zoom into the history of the Federal Reserve and the data that I have for gold backing. So again, not going to do a whole history of what the monetary base means here. I have plenty of videos about that, including the last one where I compared Bitcoin to the monetary base worldwide. This is just the United States, okay? And we're looking at that central bank money. Now, often hard money enthusiasts, people that like gold, people that like Bitcoin even, they like to talk about backing. In my opinion, after reading lots of articles, books about people that talk about backing, they don't actually understand what it means in terms of the money supply itself. Typically, gold is a very small proportion of the central bank money supply, and that means it's an even smaller proportion of the money supply that is out in the economy, the fiduciary money supply, or the money supply that banks control. Okay, so keep that in mind for this. Nonetheless, I'm going to show you how it looked in the course of the last 100 years, the United States Federal Reserve history. Okay, so what you're seeing here is a percentage of gold's value as a proportion of its central bank money, the money that the Federal Reserve prints. Not the Federal Reserve and all banks, just the Federal Reserve, all right, the monetary base. There's a couple caveats here, okay? What you're going to see here is gold that the United States in total holds, okay? Now there's two agencies controlled by the United States government that deal with money. The first is the Treasury, the second is the central bank. Due to historical nuances, the United States, the Bank of England, the Treasury is distinct from the Federal Reserve as far as accounting for money. Typically, in the modern world, look at the Bank of Japan, Switzerland, all of that stuff is going to be under the central bank. Okay, the Treasury has very little to do with that. In fact, all of the actual gold, the money, it's all there. In the history of the United States, a little bit different. You have the Treasury controlling Fort Knox, for example. You have the New York Fed, which has vaults. So I am actually lumping those gold holdings together here to make this percentage, so keep that in mind. And then the second thing to keep in mind is often they will not mark to market. In fact, to this day, specifically for the United States, they do not mark to market the gold. Okay, so the United States actually still holds about 260 million ounces of gold, apparently. Okay, Fort Knox hasn't been audited since the Eisenhower administration. The New York Fed has, apparently, although I haven't read the full audit, I don't know if they've really accounted for every bar of gold that's supposedly there. About 260 million ounces of gold. They mark that value not to market, but to the old statutory rate of $42 an ounce from the Bretton Woods times. Okay, so that's going to, if you look at, both, one, if you only looked at, say, the gold on the Federal Reserve and not the Treasury, and two, if you looked at gold not at market price, you'd get a different picture than what you have here. Here, I'm looking at market price, all right, and the gold that is both in the Treasury and the central bank. So, little bits of caveats there. Let's just take a look at it. We see here when the Roaring 20s were going on, you see that gold as a proportion of the monetary base and looking at this $21 an ounce was growing quite a bit as far as the Federal Reserve's holdings, to where at the beginning of the Federal Reserve's history, the gold that was in the Treasury and in the Federal Reserve was about 40% of the central bank money that the Federal Reserve issued. By the Great Depression, that was actually up to 71%. What happened though, in the height of the Great Depression, is Roosevelt devalued gold. He also implored Americans to turn in their gold. Okay. People call it confiscation as well. I think that's a fair assessment. If you looked at it there, so the price moves from this $20 or $21 an ounce, $28.67 per ounce, up to $35 an ounce, the percentage increases to over 100%. Now again, this is gold in the Treasury and the Federal Reserve, so that's why it's over 100% in this metric. On the Federal Reserve's books, it's everything's going to balance. It's not going to be over 100%, but this is how it looks. Okay, and then we get to the the eve of World War II, 1938. Actually, a lot of gold is flowing into the United States at this point because of Hitler, because of Stalin, because of Mussolini. And this is a story I've talked about many, many times. Because people are so worried about dictators in fascist and communist Europe, gold is flowing into the United States. So more gold is going into the United States' coffers than they had before. And this number, again, this is only the United States' earmarked gold, but it's a huge number, already at 160% of the money that the central bank issued. Not the money of the entire economy, just the central bank money. So very interesting. When people get scared, they're going to put their gold in a safer place, and that's what they did. In this case, they put it in the United States, and they would even, in this case, the United States received a lot of gold and then earmarked dollars for other central banks. So that's why the United States itself had a huge swelling of gold. We'll see this as well with the other central banks that we review here. It becomes a huge percentage, and I think it's a very interesting illustration of when markets and economies are scared. They're going to want to put their gold not just lying all around the world, but they're going to want to put it in a safe place in major, big, strong vaults with big, strong doors. See my presentation at BTC Prague from last year where I talk about this precisely with the Polish gold. Okay, so as a percentage of the central bank money the United States issued, it's very high. It means that the dollar is actually fully backed by gold at this point, okay? Doesn't mean all of dollars that are in all vaults around the world that are represented in terms of checking accounts or checking deposits. Just means dollars that the Federal Reserve has printed or the reserves that the Federal Reserve offers to its banks around America. Okay. After Bretton Woods, we see this number actually plummet down back to only about 65% of the monetary base. So Bretton Woods, of course, happened at the end of World War II. Order is restored. The United States itself doesn't have to hold as much gold. Gold becomes earmarked to other central banks. Again, somewhat return to normalcy. Okay. And we see it actually go down, down, down until the Vietnam War begins. Then it goes down even more. And this is very interesting. So now you're seeing, this is not all, keep in mind, this is only the United States' gold. I'll show other countries' gold as well. But at this time, Charles de Gaulle, especially here at the end of the 60s, was seeing that the dollar, which France held a lot of as well, was just the gold that was backing it as a percentage was falling, falling, falling to where the Nixon shock occurred in 1971. There was only of the actual monetary base that the dollar itself represented, gold that the United States held was only 18%. They held other gold as well. They held French gold, German gold, British gold, but only for what the United States held, it was a very small amount, okay? Taking a moment to remind you that this show is brought to you by Trezor, home of the original Bitcoin hardware wallet. For over 10 years now, Trezor means business in Bitcoin security and functionality. When using their wallet software Trezor Suite to connect to the Bitcoin network, you're automatically connected via Tor, protecting your identity and giving you full control of your coins in a fully open source manner, both on the software level and on the hardware level. So head on over to Trezor.io to grab your brand new Trezor Safe 5 with a secure element, as well as a ton of available accessories to back up your keys and keep your coins safe. So eventually, Nixon shock, gold goes free. You see that we're now not here to this $35 an ounce. It goes up to this 40, it's actually very quickly, but let's see if I can catch it. For a brief period, it goes to about $42. This is the market price mined. So again, it's gonna fluctuate a bit differently, but it did go up to from $35 an ounce to really, I think, until 1976. The Smithsonian agreement actually ended the gold standard officially. But regardless, like I said, the US values gold at $42 an ounce now to this day. They're 260 million ounces. I'm showing you here as a percentage of the market. If you take that gold and use the market price, how much is that worth compared to the monetary base? So again, interestingly, uncertain times, gold starts to float freely again, and the percentage of gold that the United States holds in totality rises again, because the gold price in this case is not necessarily because gold is flowing into the United States, in fact the opposite, but it's because the price of gold is rising because of fears of inflation, stagflation. The United States is still in Vietnam War here until 1975, so that's why the percentage of the United States' gold holdings rises as a proportion of the monetary base. So we get to here 1980, gold reached a peak of $850 an ounce for about 2 seconds. You see here it happens a couple different times. As a percentage of the monetary base, we get again over 100%. So very interesting. It's not over 100% on their official books. You know, they still hold treasury bonds and all the rest as assets, but the gold itself was valued more than the monetary base. Very interesting thing. What happens in uncertain times? People flee to gold, and that's how it works. So then we see that Paul Volcker pricked this gold bubble, took the Fed funds rate actually to 22% here in 1981, and the price starts to fall, and we go through this actually great moderation period, but people think, okay, maybe we don't need gold. Perhaps the central bank is also selling gold. Alan Greenspan has said this in the 90s. We get to hilarious Brown's bottom. I've talked about this before, where he sold most of the UK's gold at a very low price of $250, $300 per ounce, where it was $850 an ounce before. All right. And then that's actually the bottom. We start another bull run in gold, where 2011 we got up to, this is month end, so I might not catch it, but we got close to $2,000 an ounce in 2011. Now look at this. What is the percentage now of the gold that the United States holds officially on their books as a percentage of the monetary base? Only 18%. Only 18%, because what did Ben Bernanke do? He exploded the balance sheet. Quantitative easing 1, 2, and 3 after the global financial crisis. So even though gold is also flying because people are scared of inflation, the percentage, the green line of gold that the United States officially holds as a percentage of the monetary base, not that high again, only 18%, and it only gets worse from there. Okay, so here we see, look at the green line now. Even as gold is flying, you would think it would be something maybe like this, where gold starts to go up, also the percentage will go up of what gold represents as a proportion of the monetary base of the Federal Reserve. No, there's too much money printing at this case, at this point, and it just keeps going up. The gold price, the percentage is not that high. We bottom out actually at 7% in September of 2021, massive money printing. It is going up a little bit at the moment. It's up to 10%. So again, if you looked at the Federal Reserve's books, they would only value the gold actually way lower, because they hold, as we talked about in the national debt issue, they hold a lot of US dollars as well. Okay, so officially it's a much lower percentage. I'm not sure exactly. It's $42 an ounce divided by roughly $2,300 an ounce times 260 million ounces. That's the percentage that is actually officially recorded on the Federal Reserve's books. But if you actually look at the market value of the gold they supposedly hold, and I absolutely agree with experts here at the Gold Antitrust Action Committee who have tried to shed light on the gold industry for decades now, that something doesn't seem right the way that the central bank accounts for its gold. First of all, why don't you market to market? Most central banks today do that. I think Switzerland was perhaps the last one to not do that. They got off a gold standard in 2000. Why don't you just market to market? Your books are going to look better. The reason seems to be they want to keep room for the treasuries on their books, and it's possible that the gold might not be there, as they say. But again, these are speculations. Follow the Gold Antitrust Action Committee more for that. Bottom line, even if they still have 260 million ounces of gold on their books, that's only 10% of the monetary base. That's outstanding. Okay, so if you look at that as a percentage of the monetary base marked to market in the past, it's quite low. In fact, it's the lowest in the entire history of the Federal Reserve and of the Treasury, both of the gold holdings divided by the monetary base, only about 10% as of Q1 2024. Let me know what you think of this in the comments. Thanks for watching.